Hello, team. Happy Trading Trail Day. We are finishing the day with a fantastic day. Man, the market was really slow this morning. Honestly, I got a little scared myself when I first sat down, and I got a lot of FOMO when I first sat down as well. So today is the fourth day of the market this entire year today, and it's only January 7th, and we are finally getting in stride, which is pretty amazing. And we're going to try and continue this movement and finish this week very, very strong. Now we have to remember that this is a shorter trading week, and the market is actually going to be closed this Thursday. Today's only Tuesday, so we have tomorrow. Then the market's going to be closed on Thursday, and then I'd honestly expect some slower, if not impossible, trade action on Friday. So let's get right into some of the moves that we saw this morning. I sat down to trade right around 6:30 in the morning. And right when I was sitting down to trade, I mean, I was just a few minutes too late on this one. This stock right here is MSAI, and let's go ahead and get our laser pointer up and running. Oh, all right. There we go. So this stock is MSAI, and this morning it was setting up extremely beautifully. I mean, this is some amazing consolidation where we have this first downtrend right here that gets formed from this high, and some of this action right here kind of fades off. You have the peak, the valley, and then another peak right here into this nice break, hold above the downtrend. So you could have possibly played this from 355 this morning if you were around to trade it. Now, this does require you to wake up, at 6 in the morning, get ready to trade, and you're trading basically at 6, at 6:10. Unfortunately, I was still getting ready for the morning at this point. But another setup, this break above 355 here makes another higher peak and then pulls back a little bit, proves that it can hold 355. And that is basically the confirmation right here, right when you see it hold this area. And not along with, you have the peak, the valley, another peak, and this action right here allows you to draw in a more consolidated downtrend. And this consolidated downtrend is exactly what you want to see for a higher confidence to trade this 378 break. 378 break is kind of grabbed from this area right here. So we want to see a break and hold of this resistance shortly after the downtrend break. And if you notice this, break of this downtrend shows room exactly to that next resistance. And then we mark that down as 392. We see a break and hold. This is the hold right here, also holding the 10 on the 1. Even higher conviction that we're going to see a better move. And I remember in the moment, I sat down to trade right here on that candle. And in that moment, I really had to ask myself of, do I want to FOMO in on this action? And in the moment, I decided not to, which looking back on it, sure, I could have made a really nice amount of money here, if I took a trade right here. But my stop loss, like the area that needs to hold is down here. So if I got in right here, I could be risking, 10, 20% or something like that on a trade. That level amount of risk isn't really something that I'm willing to accept. So maybe theoretically, you got in right here and you're going to cut if a 392 fails. Sure, you might be able to keep it tight on that, but I don't think that's the best way to kind of start the day trading. I would rather be patient and let the setup come to me than chase the setup. And if you got in, oh my goodness, if you got in anywhere up here, you're kind of chasing the setup, unfortunately. So I I'm really proud of myself for kind of sitting on my hands and letting this one go without me, but it's a great one to study. This was at 6:30 in the morning today and would have been an amazing move. I mean, it went up 30-40% from this 392 break right here. Sorry, from 378 break was the better entry in my opinion. If you played the 392, you're kind of chasing because it's extending so far up from these EMAs. And these are moving supports. So if price is holding too far above, kind of makes it a little bit risky because you could be holding until the 10 on the 5 fails. And then you're going to be kind of in an unfortunate position for sure. So right when I sat down, I did think about trading MSAI, but I'm glad I didn't. Because if we stayed patient, there's always going to be another trade. And I'm really glad we stayed patient today. Now, at the same time, it was very difficult to do that at all because I was lucky enough to grab a screenshot of all of the tickers that we're setting up this morning. So here we see MSAI from this move that we were talking about from the 378. From that one move, that stock went up 112%. I mean, phenomenal movement that early in the morning. Now, at the same time, that's a 22 million float right there. So it's a little bit higher float than what Sensei and all of us like to trade. The sweet spot is 10 million or less. This is double our recommended float size. Now, that's not necessarily ideal by any means, but as we can see, all of the other ones that are setting up, I mean, they are some ugly looking setups, ugly looking fundamentals all across the board. Okay, so right here, I went through and just with a quick glance, I marked off every single one with the little red mark here on every single one that I will not trade no matter what. And I'll run through some of those decisions. So, free float and volume. These are two things that you really want to look at when choosing which stock to play. Free float and volume is quite literally the representation of supply and demand. Supply is going to be the free float. Low supply, and if you still get high demand stepping in, aka volume in this situation, what's going to happen to the price? Price is going to skyrocket because you have a low supply and a very high demand. So if we take a look at any of these, we can break down any of these. At this time in the morning, right after MSAI made this amazing move, minutes after, this is what the top gainer was looking at. It was looking very bleak this morning. So XTAI, 252 million float. We recommend 10 million. So if we look at this relationship right here between free float and volume, MSAI is only trading on 26 million volume. Only 26 million shares have been traded. But if you look at the free float, it's super small, 22 million. So already at 6:30 in the morning, basically it's 6:45 in the morning. And at this time, this one stock has already traded 1.2x times its free float basically just in volume traded at 6:45 in the morning. Now what this means is its float has been turned over already once and some change. In order for XTIA to get the same relationship of supply and demand, it would need to trade over 252 million shares of volume. That is completely unrealistic. Completely unrealistic, especially that early in the morning. There's only so much volume that can be shared between all of these tickers. The volume's always going to go into the hotter, nicer looking setup. So the fact that XTIA is already up 65% when it hasn't even traded half of its float size, it hasn't even been able to churn through half of its supply yet, and it's already up 65%. Now, saying that, that sounds great and everything. But in order to get a 112% move, like we want, we're going to need to see a lot bigger imbalance between volume and the supply. The fact that it's such a large supply, it just means that it's going to be more difficult to trade than anything else out there. So let's start going down the list of which ones actually meet our criteria of less than 10 million. That one doesn't. Oh, that one doesn't. That one doesn't. HCWC is kind of particular, okay? Because it's got a 400,000 float, less than a million, and it's already traded 1.54 million. Okay, that's great. It's already turned its float, multiple times already. It's a nice 70% on the day, 69%. And so I'll pull this one up on the chart in just a second. But RIME, 80 million float, 1 billion float, not trading that, not even interested. 69 million float, nope. 23 million float with no volume to back it up, no thank you. MCVT, no volume. NARI, too high of a float, no volume. Too high of a float, no volume. No volume, no volume, no volume, no volume. Way too high of a float. So right there, just going off of free float and volume, we have crossed off about 80 to 90% of all of the tickers that are on our top gainer list. So now if we scroll down to HCWC, this is interesting. It's trading below a downtrend. And I, for some reason, thought that this one was going to get massive attention because MSAI is pulling back. So right here, this is about 7 in the morning. And I thought HCWC was going to be the 7 a.m. ticker to win. Unfortunately, that's not really the case. I did actually end up losing on HCWC. Now I think I was playing it with a little bit smaller size, so I'm pretty thankful for that. Um, but if we just zoom in here, this is kind of some ugly range right here. These compressed candles, I mean, each candle, each minute, it's trading within a 1 cent range on absolutely no volume. So taking in the moment, even I was like, this stock is going to be a lot harder to trust just because of the setup and how compressed and difficult to trade these candles are. They're trading on no volume. Each one's trading in a cent range. It's going to be very difficult to trust. So right off the bat, I was kind of hesitant on this one. Now, I did kind of have a guess that HCWC was going to get some massive attention because MSAI, if it continues to kind of dip out and pull back into 7 a.m., it's very unlikely 7 a.m. bulls are going to try and attack it and pull it all the way up for up here for a 520 break and continue on higher. It's just going to be very unlikely for 7 a.m. bulls to do that, especially on all of the action that we're seeing is going to these higher floats, ugly tickers. So I was thinking HCWC, maybe we break VWAP here and get a push at least back up to the downtrend. That's what I was looking for. HCWC definitely ends up being a small little loser for me today. I think I added it somewhere in here. Yeah, HCWC, I end up losing about $22 on, so I kept it very tight because I saw a 7 a.m. attention split between a high float and another one. But again, this early in the morning, I knew that there was going to be another setup. We just needed to stay patient. And very glad we ended up doing that because IMRX, this one is a beauty to study. Absolute beauty. So right here, we're seeing it set up just after 7 a.m. And this was right after me closing my position from HCWC. So I see IMRX on the scanner and I pull it up, and in this area, we're moving things. In this area, we're moving things again. All right, here we go. In this area, I'm trying to just watch it and wait for the setup to come to me. I saw it hold the 10 on the 1 right here, and I saw this great large green candle form right after. I try and hop in right about here for that 334 break. I was probably playing a little bit too aggressive. These first few were actually with smaller size because I don't like trading on this front side of the move without having a consolidated setup. If I ever trade on these front side of the moves, I always try to play them with some smaller size, thankfully. But lucky enough, this rejection from 334 for it to come back down, test VWAP, test support, hold support, and come right back up was some amazing action that we actually wanted to see. Now, I was a little too short-sighted to try and play it from here. Ended up cutting my loss right when the 10-1 failed, so I closed my position right about there. I'm not upset that I closed my position. I kept it tight enough. Now, what I'm really happy about is I was able to average back in very quick. So right when I saw this recovery right here, my first buy was right here when we were starting to break back above the 10-1, and I went in with some smaller size. And then, lucky enough, right when we start to break this downtrend, right when we reject from here, I added this downtrend here. And being able to break and hold this downtrend with a starter position below the downtrend. I mean, this was a very aggressive starter, and I would have been able to keep that very tight if the VWAP or the 10-1 fail. Now, having this starter means that I can go in with a roughly large size at this 10-1 break right here. Sorry, at the break of this downtrend right here. I'm going with larger size, and that's just going to walk my average up a little bit. So I went in with much larger size for this breakthrough 334. 334 is grabbed from this candle right here, from the top of this red candle, breakthrough 334, break and hold. I did a lot of trimming right here because with the action that I was seeing, I just wanted to lock in some profit, especially early on the day. I'll give some breathing room to trades later on in the day once I've built up a cushion. But I'm very glad. I think I took like 75, almost 80% of my profit off the table right here. And then I do end up closing my position right about here. So right here, I wasn't actually expecting this accumulation and break through 3.7. I was not expecting that in the slightest. So I thought that we were just going to come back up here and then reject from 3.7. Now, on this, right when I sold, I then actually added this downtrend for this pullback right here. And I knew that if we were able to break through this right here, I can add back to my position for a move higher, especially because I was able to lock in so much profit on the day. So right here, I think I'm sitting about up like $200-300 up on the day. Just from this first, nice, I think it was like a 17% move from 334. I don't know, someone else can calculate it, but from 334 to 3.7, that's kind of the range that we were able to trade in right here. Now, the breakthrough 3.7, it was showing a lot more room to run. So I added with shares right here. All of this is the kind of strength that you need for the conviction to add right here. Without seeing this movement, you don't normally add on a quick little pullback on a downtrend like this. I decided to because I was pretty confident in being able to keep it tight, and all of this red area is going to be your stop loss. If the 10-1 were to fail here or the downtrend, you get out quick if you're playing up here because it's so top heavy and extended from the 10 EMA on the 5 that was the same reason that I got out right here was it's so extended from the 10 on the 5. Now, if bulls are able to get it up very quick here and start pulling up the 10 on the 5, that's a different story. Okay. And in order for that to happen, we would need this area to hold right here. So this would be your stop loss. Exactly, the downtrend or the 10 on the 1, whichever one failed first. Okay, that was the thought process. I was thinking about this before taking the trade. I start averaging back in. I have a new average of about 3.7 right here for the breakthrough and the accumulation upwards. So let's scroll down. And this is the entire recap so far. So this was the first attempt, a second attempt right here, some profit taking, I definitely did too much trimming because you know that 3.34, that original break needs to hold. And I definitely do a little bit more trimming, but looking back, it was my first time being green on the day. So locking in so much profit isn't necessarily a bad thing. Maybe I could have left a little bit more on the table for the move higher, but seeing the 10-1 fail and then, it extending from the 10-5, I think it's profit is profit in this area. Like I can't really be upset at myself for selling too early, but I was able to play it again. So I added at the downtrend and added to my position. So added at the downtrend and added to my position when I saw we were strong, breaking in a very strong way. So my new average after adding for the 3.7 break was roughly around 355, right under the mental stop loss. So I think so let's recap here. Adding anywhere within this yellow area is kind of what you want to see for the breakthrough right here. So if I add right here, and then I add for the 3.7 break, that's just going to bring my average up. You don't want to bring your average up too much that your new mental stop loss, because the mental stop loss is the 10-1. So if you can keep your average all the way below the 10-1, you should walk away from that trade green no matter what. So let's scroll down a little bit more. And IMRX, this is the first attempt, second attempt, pullback, retest at 334, and then this is the break of that second downtrend and for that move on higher. So this is where I actually ended up playing it again for the gap fill. So this second attempt from down here, closed it right about here, added again for the third attempt from the downtrend, from this downtrend break right here, and then I started scaling out into profit up here, closed my position right when the 10-1 failed. And again, this early in the morning, I'm actually expecting it to come back down and kind of move sideways, some consolidation for that move through 5. 5 is a key psychological level. And then IMRX, look at this gap fill. So this is actually the daily chart. We're on the daily chart on IMRX. And if we look here, we scroll back, go back to March here. we see that there is a massive gap here on the daily. That gap starts down here at 5, and then closes at 571. So I was aware of this. I just thought, since we were finding so much resistance here, fail of the 10-1, I should close my position. And I'm actually very happy that I did. I locked in a lot of profit right here. And if it came back down and, move sideways, consolidated, if I didn't sell right there at the 10-1, I would have given away too much profit, in my opinion. So I'm very happy that I closed my position right here. Now, what I'm even happier about is being able to find this nice little consolidation right here to help me line up this extra entry for the breakthrough 5 and the test of 571. I wanted to get into this gap fill just in case something crazy happened. So this was another nice little scalping trade right here that I'm very, very happy about. So I got in on this candle. What you would ideally look for here, let's zoom in here, and we can go bar by bar on this one if we really wanted to. So right here, you're going to see that green area, and then you're going to see this red area. The red area is going to be your stop loss for the entry. You can add basically anywhere within this area, in my opinion, for that breakthrough $5. $5 is this orange line right here. So if we wanted to break this area, we know that we need to break above and hold above that downtrend for that move higher into the gap. The gap starts at $5 again. So I added right about here, and my mental stop loss is either going to be the 10 on the 1 or the support of the downtrend. Support of the downtrend is just whatever price would come down to and test that downtrend at. So as long as it holds above this area, that should give me a high conviction that we should see that move higher. And that's basically exactly what happens. We get the strong break of the downtrend, and then we just right into the gap, and then right all the way up to the 571. Technically, only hits 564 on the day, not 571. I mean, that's close enough. That's basically closing the gap. And then I did most of my trading within this area right here. I think I took about 75% off the table right here, and then the extra 25%. I would have been really surprised if it continued on higher and broke the 571. I thought that the top of the range right here, being that the gap has basically been closed, I should absolutely get out at the 10 on the 1. Leaving a little bit more breathing room on that trade is perfectly fine. So I sold on this candle right here, and right when the 10-1 failed. These are 8 a.m. glitch candles, so everything looks a little janky. But price was right up here when I ended up closing that position. So this was one of the best opportunities the market gave us today, IMRX. And playing the gap fill as well, completely amazing. Now, if we scroll down, we see that I traded another stock, and that is HOTH. I'm kind of upset about HOTH, and I'll get into that in a second. But overall, I'm sitting up $536 on the day. So right after this, I was like, you know what? I closed my laptop, and I'm going to walk away. And I wish I did. Of course, there's always the straw that breaks the camel's back. So HOTH, this is into market open. I decided it was looking so good, I was like, I'm gonna go in with some smaller size and just play around a little bit. And play around, indeed, I did. So this is HOTH. We saw this nice action early around 8 in the morning. So right after 8 in the morning. So IMRX at this time is pulling back. The first one from this morning is still pulling back. MSAI is still pulling back, failing every single EMA. But this is something awesome to take a look at. So HOTH here makes that first initial move. This isn't really tradable action by any means. This is not tradable action in any means. We need to see a peak, the valley, and then the peak to draw a nice downtrend. And that's exactly what happens. So this first initial downtrend here is basically our first opportunity to even try and trade this one. I decide to not trade this one right here because, you know what? It's like 9:15 in the morning. I think I'm just going to wait until market open, kind of just sit on my hands. Like, it's, in my opinion, it's really rare that you see anything exciting happen from 8:45 until market open. Normally, this window right down here, 8:45 until market open, is just an opportunity for stocks to kind of set up and put their makeup on before market open for them to look as pretty as possible. And that's kind of what we see on HOTH. HOTH, amazing one to study. So right here, I try and get in for the breakthrough 188 a little too early. Now, again, normally takes about 5 to 10 minutes for everything to figure out what direction this stock is going to choose into market open. Now, right here, we're able to draw this and this. This forms a really nice downtrend here. This downtrend is what was giving me conviction to play the 188. I thought it was going to be smart for me to kind of get in a little too early, unfortunately. So I got in. I think I had an average around like 170 or something. I should have had an average way closer to VWAP here. Unfortunately, definitely did not. And even if I had an entry closer to VWAP, this isn't enough breathing room with how fast it was moving to really lock in profit, in my opinion. So, like, I think this would have been a losing trade. Either way, the only way to not turn it into a losing trade is if you held through a lot of dipping, which honestly, I was so green on the day. I didn't want to ruin the momentum that I found from IMRX. So, me keeping it tight is perfectly fine. Now, I'm still on a cash account. So, like, I was conscious that this was basically going to be my last trade of the day. Because I have to wait for settled funds to get back into my account, and that happens overnight. So this was basically going to be my last trade of the day. Now, looking back, I wanted to give it some extra breathing room, especially since I had a green cushion. So I actually end up selling when like the 10-5 fails right down here. You know, I kind of wait a little too long. And I definitely should have been able to cut it quicker when VWAP fails. That would have saved me like, I don't know, 15 cents or something like that per share. So unfortunately, I am walking away red on this ticker, but it's an amazing one to study. And I knew it was going to be an amazing one to study because we saw this action right here. This is something that I've personally been studying. It's called a VWAP reversal, where you see something kind of fade off and kind of look very somewhat bearish after market open, or at least difficult to trade. What I've started to notice when you see strong action like this, almost every single time beforehand, you see something like this. Now, HOTH ended up being the biggest winner of the day and making a 110% move basically from this 188 break. Truly phenomenal trade. With live money, I got in a little too early for that 188 break, ended up closing the position right here. This position that you see is me actually paper trading it. So I did paper trade it because I really ran out of settled funds, and I'm just happy to be green on the day, so I don't want to overstay my welcome by any means. But I am happy I paper traded it just to kind of put in the reps, because that's what this is about, putting in the reps. So this is something that I've personally been studying, is when you see a break above. So really quick, this black line right here is VWAP. So this black line ends up representing VWAP here. So what you see is a breakdown below VWAP, kind of comes back up to kind of test resistance, comes back down, and is just trading through VWAP. But overall, it's kind of been difficult to trade at market open. It's showing some very big weakness, because it hasn't been able to break this 188 yet. Now, I know that this stock still has potential just from looking at the daily chart, and I'll go into that in a second on why it has so much room to run. But more importantly, this guy is able to get a strong reaction above VWAP, comes back down, closes above, and then rockets right after. So what I've seen is stocks that end up making this huge explosive move like this, kind of in that 10 to 1030 area, what you'll almost always see is a break and hold of VWAP into this much larger move. So in reality, you could have had a starter from down here, and that's actually what I do paper trading. I've got an average of 174 here. That's because I had a starter right here and then averaged up right here. So starter close to VWAP and then averaged up when we're breaking the downtrend. If you have shares from the downtrend, you want to see it break and hold. You don't want to hold past the downtrend. Because then, if it breaks below the downtrend, you kind of expect to come back up, test the downtrend, and then continue on lower. If price is under a downtrend, the trend that you think it's going to be in is, guess what? Downwards. So that's what you want to expect. If price is breaking out of a downtrend and holding above the downtrend, you almost have to expect price to be in an uptrend. Okay? You don't want to have it consolidate above the downtrend, because guess what? It's just going to move downwards. Consolidation on top of the downtrend is still somewhat in a downtrend. So that's when you need to reassess and then look for a new downtrend break. But in this case, what I really want to study and point out is stocks that kind of have this fading off movement and consolidation below VWAP here, because that's kind of what this is, consolidation of below VWAP. If you see a strong break and hold of VWAP, you almost have to expect price to at least test the next resistance above. So right here is the key area that I had focused on. One starter, second starter full position size brings up my average just a little bit. I've got an average of 174 on this one, and boom, bam, bop. That would have been an amazing entry. The break and hold of VWAP is what you need to look for to land these VWAP reversals. And this is an amazing trade, and we can go down a little bit longer, a little bit more here. The reason we kept so much focus on this one and why it was showing so much more room to run, one, because most of the other stocks this morning were just high float, ugly looking stocks. There's no other way to say it. They were ugly looking stocks. It was very difficult to trade this day. And it took a lot of discipline to kind of narrow down focus from MSAI, watching volume float into IMRX, then watching volume float all the way to HOTH. You really had to stay on top of it and stay on top of all your screeners and sort through all those ugly looking stocks. But one of the reasons that help us figure out which ones are going to have room to run is this system right here. So right now, HOTH, the chart that we're looking at is HOTH, the weekly chart. So each one of these candles represents an entire week of price movement. So what we look for here is a break of one longer term EMA often shows room to the next EMA above. Now, what that means, okay, this isn't just like a rule of thumb where you can apply this to every single ticker. It's only when the tickers actually have attention and they're hot enough to trade. Today, HOTH was hot enough to trade. If we go back to that ratio, supply and demand, definitely had enough supply, definitely had low enough supply, and definitely had enough demand. The float on HOTH was only a few million. And HOTH is already, let's see, was it on the scanner? HOTH free float 6.84 million. Then the volume it got the entire just in pre-market was 417 million. If we go to the full day, HOTH 417 million. So that's what it got the entire day. Okay. So HOTH was an amazing trade. DATS, I haven't really looked at this one, but this was an amazing one. Went from all the way down from 275 basically all the way up to $10. Phenomenal trade if you were able to land it. Congrats if you did. If you wanted to land this one, you really would have had to line up this downtrend on some nice time frames here. Maybe move this one up to reflect that. And then notice how it breaks above, holds above, continues on higher. And you could just traded all the pullbacks all the way up. It probably even held the 10 EMA on the 5 most of the day. Yep, ended up holding the 10 EMA on the 5 most of the day. So you could have had some entry down here and held throughout most of the day on DATS. That would have been phenomenal. But more importantly, HOTH. 6.84 million float with 417 million shares traded. That is a huge imbalance of supply and demand. So if we go back over here, having that imbalance of supply and demand kind of helps us give conviction that we might see some larger movement happen on this stock. Now, more importantly, if you see a break of one EMA, it can show room to the next. So let's break down what that actually means. This purple line on our chart right now is the 50 EMA on the weekly. 50 EMA on the weekly. A break of the 50 EMA on either the daily or the weekly chart can often show room to the next EMA above. In this case, that is the 90 EMA on the weekly. And that's basically exactly what we see. So a break and hold of the 50 EMA can show room to the 90 EMA. So just seeing this, it's not a guarantee by any means that it's going to be able to get this full move all the way up here to 337 because that's a 335. That's where the 90 EMA is. It's not a guarantee by any means that we're going to get that in full entire move. And actually, in this case, if we go to HOTH, it made a high of 380. So it actually made a move above 337. Nice little pop above 337. But it's just a way to kind of see which stocks are going to have that larger room to run. Okay. Many of those other like smaller floats, like HCWC that I tried this morning, they didn't have a setup like this. They didn't have the 50 EMA down here at $1.25 and the 90 EMA down here at 335. So seeing this kind of expansion with the EMAs is what you want to look for to kind of nail that larger movement if there's even room for it. In this case, there was definitely room for it. DATS, another one, amazing move. Unfortunately, wasn't sticking around to trade it. Had things to do. But walking away green on the day. We are green, up $536.34. So pretty happy with the day so far. And come take a look. And only needed 3 stocks and one really good one to kind of. Oh, yeah, only needed 3 stocks to trade today, and we are walking away pretty happy on the day. So, cannot complain. $536.34. I hope everyone has a fantastic day. Thank you guys for sticking around with me. And if you guys have any comments, questions, likes, whatever it is, leave a comment. Please go ahead and do so. Um, it's been the Trading Trail Update 4. Looking forward to number 5. Talk to you guys later. Adios.